Hello traders, Corey Mitchell here with TradeThatSwing.com, and this is your swing trading stock market outlook for the week of November 3rd. Each week I go through the same process, just helps me decide how aggressively I'm going to be trading, look at a few different things, how major indices are performing, market health indicators, recent watch list performance, and you could dig into specific areas that are doing okay. We're just going to touch on a few general areas. So on that note, it's always good to do this sort of analysis yourself. I know I'm doing it for almost your benefit in a way because, of course, I'm doing this, but for your specific strategy, you could develop a protocol like what I'm going through for specifically your trading, when you like to perform, how deep you want to dig. I'm looking at kind of general market performance here and a couple sectors, and you could dig a little further and find, are there any specific areas that are doing really well that you could potentially trade. For the week of November 3rd, I would say stock market conditions are mediocre. It's not a super easy environment. There's one little caveat to that, I would say, and I did go through my best swing trading stocks list, and that's this one here. If you're ever wondering where this article is, you can go to stocks, stock market analysis, and trades, and just click on this, and it gets updated in that section each week. So going through this list, there are quite a few stocks on there that are still acting strong. They have not changed their character. And what I mean by that is I want to see sort of like a continuity of how a stock acts. And if a stock's trending up and it's pulling back, let's say 15 to 20%, we've been in this uptrend a long time, right? So we get to see how it's been acting. Right when an uptrend starts, you have an advantage of the uptrend's just starting, so you have a lot of upside potential. So you're compensated that way for having less information. Now later in the trend, we have more information, but obviously much of the end result has already taken place. We've had this huge trend. That doesn't mean there can't be more left, but we have more information and probably less time left in that trend simply because it's been going on for so long. So if a stock's been pulling back, let's say 15 to 20%, and then having its nice move, pulling back 15 to 20%, it doesn't have to be exact, but it's just that's the tendency it's shown. I want to see that same character. So on this recent pullback, which a lot of stocks have pulled back or at least chopped sideways in the last week, month or so, I want to see that same character. If I start to see that stock sliding 25, 30%, I'm not going to buy that pullback. Or if a pattern forms, I'm not going to trade it. That's a change of character. And this whole process, this thing that I'm going through each week, is basically I'm looking for certain characteristics which tend to correlate with better trading, better win rates, better risk-reward opportunities. So if there's a change in that character, that backs me off. It's not so much about prediction. Just because a stock dropped more than it did before doesn't mean it can't go up. What it means to me is that there was a change of character. I no longer want to trade it. So I saw a lot of people, let's keep scrolling down here and look at the charts. We had a move up in the S&P. We had a move up in this is the NASDAQ. We had a move up in the S&P recently. You look at the NYSE Composite and the Russell 2000, very choppy. And I saw a lot of people say they got chopped up in the last month. Had done really well through most of the year, and now they're giving back lots of their profits. And there's this idea that, or most people come in to trading with this idea that they need to predict where the market wants to go. So last week I said I'm not interested in trading, And yeah, I miss out on this, but it doesn't matter. It wasn't showing the character that I wanted. And I feel somewhat justified because it is still chopping around. And even if these had all gone, it wouldn't have mattered to me if I missed a move because I didn't like the character. The market health indicators weren't good. So trading becomes really about boundaries as opposed to prediction, where you flip that script, where most people are coming in and looking at the market and saying, okay, where's it going to go? I need to make some money. I want to make some money. And then you're going to lose it all when you get chopped up. As opposed to someone who views trading as boundaries, almost like a relationship between you and the market. To have a healthy relationship with the market, I have to admit that the market is just a crazy person, but I enjoy my time with them. So I'm going to just let them be them, but I have to put boundaries around what I accept. And you could maybe think of this as, if you have that kind of crazy friend, or maybe you think back, maybe you've got rid of that friend in your life, but you think back to, maybe high school and there was just like a really fun person, but they were just crazy, kind of toxic, and you eventually cut ties with them. But the market's kind of like that person, and they're a little crazy, so we have to set boundaries on what we accept from them. And that's what I'm doing with trading, and what most great traders do, is they're not trying to predict, they're not trying to change their friend or anticipate what they're going to do. They're just saying, hey, if you do this, I'm out. Like, I'm leaving tonight. That's fine. We'll get together tomorrow, And then you can have that relationship where you're just willing to leave the situation if your market, the crazy friend, starts doing things you don't like. Or you can start to see changes that kind of indicate, they're kind of veering toward crazy. I'm just going to get out. So it's not about prediction. It's just about saying, hey, I'm not willing to accept this. And I'm only going to hang out with the market and take trades when it is acting appropriately for me. That's the mind frame great traders go into the market. They may frame it differently, but they're setting their own boundaries. They're saying, I'm only going to trade when the market is acting like this, and if it's not, I don't care if I miss out on a good time or if the market happens to run up. Doesn't matter. It wasn't acting how I wanted. So indices a little bit mixed, still uptrends. We don't have any real downtrending activity yet. Choppy in these ones, still moving up in the S&P and the NASDAQ. Canada chopping around. Bitcoin chopping around, and this range just keeps getting bigger, so it's getting a little more complex to decide, like, okay, where are the false break? Everything's just a false breakout at the moment. So what I'm waiting for is I need some confirmation. At this point, I'm going to need to see a lower low or a higher high that basically holds, like it breaks out up here, has a pullback that holds, and then continues to run. Again, it's not about prediction. It doesn't matter that I missed some of this move if it does go up. What matters is it's showing a character that I like to hang out with. Or to the downside, we start seeing basically lower lows and lower highs. Like I need to see some sort of trending activity. Anything in here would be, trading in here would be very short-term, kind of scalpy, to maybe take advantage of some volatility, but that's not really what I'm after for the big money trade. I've kind of zoomed in here, or zoomed out, to show some price action. This is the miners ETF, gold miners up here, and this is the gold ETF. And last week I mentioned we were at about an 8% decline, and I just said, during uptrends after an 8% decline in gold, generally not much good happens right away. And again, this is just character. It's not so much prediction. It's just, if I look back and I see this 8% decline and it chopped around for, a couple months and then eventually went up. And I look at this 8% decline and it chopped around for several months and then went up. Do I want to just jump in on an 8% decline? There's the argument that says, well, it did stall out near 8%. That's a good buy point. And if we go back further, we can actually see 8%'s a little bit of a threshold of, we either get the chop or a bit deeper decline. So there's just no interest. There's no urgency for me to get into this trade because it's showing a character that I don't want to hang out with, right? And hanging out, I mean taking trades. So I don't mind sitting out. It's either going to continue to drop, it's going to chop sideways like it did before, or maybe it just runs higher, and that's fine. Whatever. I missed a move. It doesn't matter because it wasn't showing the character traits that I wanted to take a trade in. Let's move on to the market health indicators. So basically staying out of gold right now as well. No interest there for me. This is the S&P 500 chart. These are the market health indicators. These look under the hood of what's going on. Volume not important to me at the moment. It would become important after a big decline. We want to see as the price starts to rise, a follow-through day would look at volume, but we don't have to deal with that. We did need to wait for a decline first. So volume not important to me at the moment. This is rate of change. 1 day rate of change is simply how much the S&P 500 moves in a day. We had this big drop, but the price did recover it. So I've put this actually back to smiley face because uptrends are correlated with low volatility. And this upper line doesn't matter as much. It's more just kind of a reference point for me. But this lower line does. When you have a 2% single day drop, if you look through this whole uptrending period, there were no 2% single day drops. It was low volatility, which is generally correlated with rising markets. People are complacent, they're just buying, no big selling days. And then when you have big selling days come in, if you go over here, like the big selling days came in and kind of marked a potential start. It doesn't mean we're necessarily going to reverse lower like we did here. But when there's a 2% down day, I've generally found no problem with staying out of the market for a few days. It's, again, a change of character, which just says, hey, I don't like hanging out with my crazy friend right now. I'm just going to go home. And when they stop acting crazy, I'll come back and hang out with them. This, again, so big drop, not too much missed by staying out for at least a couple days. Now, I opted not to get back in to any trades in the last little bit, but even if I did, you want to stay out at least for a few days after that 2% drop. See what happens. If we stabilize, great. If market health indicators are okay, if you see setups that are okay, then maybe get back into trade. But there's no reason to jump in to trades right after this decline, right? Because this usually is a pretty common thing. These big 2% drops, you either saw more downside or some potential chop. Nothing really missed by staying out for a few days. In comparison of if we were to jump in, you'd get chopped up a lot. Advanced decline line. Advancing stocks minus declining stocks is a cumulative number. And a little bit of divergence here. You can see I've marked this little swing low here. Then we had to move up. And we've come back to that swing low. And I marked the equivalent one on the S&P. So this was the equivalent low there. And the S&P well above it. So the fact that this came back a little bit of bearish divergence. I wouldn't say this is, extremely bearish. It's not a long-standing divergence. But it was enough for me to downgrade it to kind of neutral. If we continue to move lower while the S&P 500 stays up here or moves up, that indicates a bigger divergence. I have generally found that the this indicator wins out. So if this one starts trending down, a good chance that the S&P will as well. If this just starts moving up with the S&P, then they're moving together. It goes back to a smiley face. But right now, a little bit of just a yellow flag that says, okay, a lot of stocks didn't move up. And we can see that by going back here. NYSE, a very broad measure of stocks, different industries, different sizes, and it's still chopping around. Only the large caps, the really big companies, which move these indices are extremely concentrated in a few stocks, even though they hold 500 and the NASDAQ holds 100. They're very concentrated at the top. So those stocks maybe did well in the last few weeks and pulled these up, whereas kind of the average, the typical stock, not doing as good. Did we go through? Oh yeah, we're still going through market health indicators. This is upside volume versus total volume, nothing relevant. I'm looking for extreme values. We haven't had any recently, so that's just neutral. And this is percentage of stocks above their 50-day moving average. And you can see we are below 50, around 40% for both the S&P 500 and all stocks, all US stocks. And it's generally easier to make money on the long side, this big uptrend here when most stocks are trending up above their 50-day moving average. Here it got kind of close to 50, maybe back off a little bit during that pullback. Once things get a little bit better, you can get back in, assuming the other health indicators are okay. And this is why I go through this process every week and pretty much every day, even though I only update this once a week. I'm looking at these throughout the week as well, which is also why I recommend you go through your own process for this. The ultimate indicator, how many quality setups there are and how many trades are working. Like I said, I did go through the best swing trading stocks list. It's listed here. If you go to the website, it's also under stocks, stock market analysis, best swing trading stocks. And that's just a list of really high momentum stock names that have been performing well. And like I said, a lot of them haven't changed their character. They've been having 15% pullbacks, and the recent pullback was 15%. And they haven't changed their character. It's still just doot, 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 doot. But that said, exposure for me will be minimal. I don't want to put a lot of money at risk simply because the market health indicators aren't great. So what I'm doing right now, not much. No longs. It's kind of, I'd say it's just kind of mediocre. It's not great. I'm not going to start going short or anything, but I'm not really anticipating the longs. My friend's acting a little crazy right now, so my own personal boundaries, I'm just going to say, you know what, you act crazy for a little bit. Once you start acting how I like, then we'll start hanging out again. I'm not going to try to change the market. I am not going to try to predict what they're going to do. I'm just saying you are acting crazy at the moment, so I'm out. Don't forecast, look at current conditions and whether that warrants me trading. It doesn't look like easy money out there, so I'm going to stay out. That goes for Bitcoin, gold, stocks, all of them at the moment. And day trading's been spectacular. We have huge movements intraday and so that's where I will focus my efforts. Swing trading is more of a periods of action followed by inaction, sometimes for months, where you're really active for a period of time while conditions are really good, and then you totally back off because your friend's acting crazy. Day trading is a little bit more, those are divided now down into like 5 minutes and an hour. Maybe the market's acting great for 5 minutes, so you're trading, and then it doesn't act so good for half an hour, so you're out, and then it acts good for 10 minutes, so you're in a trade. So that the time frame is compressed. It's still the same thing. We have periods of action and inaction, but it's more compressed. So generally, most days we're going to have some opportunities where we're swing trading. It could be months before I really get active again if the market keeps acting crazy and doing things that I don't like. So I'm going to wait for it to do what I want it to do, and I'm going to hang out with it while it's doing those things, and when it's not, I'm out. Happy trading out there.